How's it going, guys? R Saba back with the new video. Today is December 7th, 2022. We're going to be starting the first episode of a series called Charts and News. A couple times a week, we're going to be analyzing charts, analyzing news, see what's going on with the macro structure, see what we're thinking, give some forecasts for the economy, for the markets, finance, because that's what we do here. We're here to make money. We're here to trade equities in these uncertain times when we know things are getting pretty crazy and the elites are just getting more elite. We have to get elite ourselves, all right? So let's take a look over here. We're going to start with the S&P 500. Yesterday was a big red day, and the day before was also a very big red day. I noticed that it bounced off of the 30-day moving average. I don't have it drawn out here, but this is a rising wedge pattern, and I'm pretty sure it broke out of it. Pretty certain. The 30-day moving average right here. This is also a very important level. It's the 50% retracement off of the August 16th highs to the October lows. 50% retracement. It has to break through that and the 30-day moving average for me to feel a confirmation that we're going to keep going down. The next index, obviously the Dow. Same thing. It bounced near the 30-day moving average. 21 EMAs here as well. It rejected off of those August highs. The Dow is obviously the most overbought of the three indexes as markets move to more risk off. People want these low PE stocks. They're not feeling the risk for the high PE tech stocks anymore like they once were, and that's why you can see that the Qs or the QQQ is the most or the least overbought, I should say. And it broke out of the rising wedge. It broke out of this important level here, which was the 38.2% retracement. But it also bounced off of the 30-day moving average. So I'm not going to be confirming that we're going to be seeing more red until I see QQQ, SPY, and the Dow break below those 30-day moving averages and actually break. Also, QQQ could be forming a triple top here, but it has to break this neckline that it's literally at right now, which is the 30-day moving average. It's the same level. So if it breaks that, yeah, we're going red. Oil, and this is what we'll do for charts, is at this same level here. Could be forming a double bottom. I don't know. But oil looks extremely weak. All we need is some news that China is reopening, and then oil could skyrocket. But nothing on these charts shows me that a reversal is imminent. It just looks weak. If I were to expect, if it breaks through this 73 level, right now it's at 73.81. If it breaks through that and gets around here, I could expect that to be the next point of support, that $65 level, as it's about to break the 52-week lows. So we're going to have to be looking at 2021 levels, which is literally last year when we were at these levels. So we're going to see, 52-week low, 66.10. So that's it for charts. We're going to, later on, we could look at other charts for single stocks, whatnot. You can ask for them in the comments. We'll look at anything, but we're going to look at some news right now. So, because the news is the entertaining part. Okay, so we're going to look over here. This is funny. BIS, so the Bank of International Settlements, warns central banks will soon be forced to bail out capital markets. Guys, I mean, like, what did you expect? What did you expect? BIS's quarterly review cites the Bank of England's intervention in the bond crisis as an example. Duh. The only thing is the U.S. is in a much better situation. We have the strongest currency. Obviously, of all the currencies in the world, the U.S. is going to remain the strongest. And we're not so shortcut on oil supply either. So we're not as bad as Europe is right now. But what happened in England is definitely going to happen here. They're not going to... This is a debt-based system, guys. It requires a continuous amount of borrowing. When they raise interest rates to slow down borrowing, they can only do that for so long. They're probably just doing that to make you feel like they actually care when they don't. They're going to continuously inflate the money supply until you are begging on your knees and they provide you with a solution. That's their plan. It's inflation. And then the implosion of the debt crisis. They move everything digital. Blah, blah, blah. It's extremely evident. If you can't see it yet, but if you can, you need to get your hands on some gold and silver and some commodities, some crypto, XRP, Bitcoin, something that isn't your trash currency, trash fiat currency. Every fiat currency in history goes to zero, guys. Look at this. Speaking of the UK, this is insane. British families eating pet food and heating meals on radiators and candles as households struggle amid cost of living. Charity warns. So, like I just said, England is getting screwed right now because I'm praying for my European friends right now because they can't afford anything. Their energy bills have like 6-2-fold because these governments do not care. They do not care. Do you think the government is actually sitting there trying to help and say like, "Oh, Putin, start giving us gas again"? They don't care. They didn't in the first place, and they don't now. The fact that these governments now have another country to blame for the economic faults they've caused in the past 15 years, they're loving that. This war is not gonna ease off anytime soon because they're gonna use this war as their scapegoat, just like they used the COVID as their scapegoat to print $10 trillion. Like I said, they need to continuously inflate, and they had an excuse to inflate there. Oh, there's a COVID. Put your face diapers on. Please protect yourself. We'll just give you money. Don't go to work. You can't make it up, guys. You really can't. I mean, and look, BIS warns central banks will soon be forced to bail out capital markets. Who do you think is going to pay for this? Central banks will print, but when the government has to bail out capital markets, they're not just going to borrow from the central banks. Your taxes are going to be elevated. You're going to be paying for it. Your tax paying dollars is going to be paying for it. Speaking of central banks, look at this. I can't believe this. Central bankers have to make hard decisions, and sometimes they get it very wrong. Aw, poor central bankers. Look, who's this guy? Malcolm, Bank of Canada. Like, you can't make this shit up, man. Even the Bank of Canada's Macklem cannot predict what's around the corner. These guys pick what's around the corner. They don't have to predict anything. They pick. Both the Bank of Canada's Tiff Macklem and the Jerome Powell at the Federal Reserve used all their official authority and confidence. Oh, yeah. They used their confidence. They care about you so much. You guys need to learn how to read charts, how to read news, how to read people. These guys, Macklem and Jerome Powell, you know what they did? They learned a bit about economics, learned how to use some fancy words, and then the rest was just learning how to act. They don't care. They don't care. They just have to act like they care, guys. You can't make this up. Macklem makes his final rate announcement of the year on Wednesday amidst a warning of grocery prices rising by $1,000. Like, do you guys think for a nanosecond, but after the 2009 financial crisis or 2008 that was caused by bankers, that led to bankers being bailed out, do you think that for the past 15 years after that, leading to today, or 14 years, that they were just dumb enough to have low interest rates and continuous money printing and QE, and then from 2020 to 2021 have $10 trillion put into the monetary system? Do you think they're just that dumb? Oh, I wasn't thinking. Bruh, I could grab a economics first year student and he wouldn't make that stupid mistake. But they're not. It's not stupidity. It's corruption, guys. They're not that stupid. They're not that dumb. Don't read these articles and think, oh my God, I feel bad for Macklem and Jerome Powell. You can't. They're not that dumb. They're doing this to screw you guys over. The rich get richer and the poor get poorer. But luckily for you, we know how to trade equities. Okay? We know how to trade equities. We know how to start businesses, and we know how to get out of this mess. Look at this. Look at this. If you still think they're just stupid, well, they must be really stupid, because it's getting to the point where the amount of money the federal government owes to other people's like 31 point something trillion, and the interest has now gotten to $736 billion interest. That is around the same level as their defense budget, if not more. if not more. So, like, you guys know how compound interest works. Like Einstein, compound interest is blah, 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 the best thing, the biggest weapon or whatever. It's working against the U.S. government. Like, in 2000, yeah, look, see, 368, it builds up. It builds up over time. Goes up, and look, this is nuts. It went from 600. Literally this year it was 600. It went up that. Look at that steep incline. You know why that is? That's the $10 trillion. That's the stimulus. Where do you guys think all those stimulus checks you got, the U.S., Canada, wherever you're at, where do you think the government got that? They borrowed it from the central bank, who is the real government of the world. Central banks, they're all coordinated. They all did the same thing during the pandemic because they're all coordinated. Like they're not all that dumb, but they all do the same thing. Screw you over. They can bring in their new system, bring in UBI, bring in digital currency so they can see whatever they want. I forgot to show this, but there's another article. They want to see every dollar you make past 600. If your kid is out there selling t-shirts or lemonade and he made over $600, tax them. Bring it in. The IRS wants to know. And it might be hard for them to know now because it's change in cash. But when it's digital, they will know everything down to the penny. $600, give me half. Can't make it up. Last but not least, the layoffs are starting, guys. This takes time, okay? Anyone who's saying, like, oh my God, the market's bottomed out, we're finally going up. Bruh, you got to realize interest rate hikes, it takes time for the ripple effects to come in. Now, PepsiCo, one of the strongest companies in the world. This is one of my favorite investments. If you're like I were a long-term investor, when we capitulate, there's a chance I put a lot of money in PepsiCo. Lay off 100 workers in headquarters roles because they can't. Demand is slowing down. Supply was already way too high, and now they have to lay people off. I mean, I'm sure they wanted to for a long time. Now they just have an excuse to do it. So, yeah, that's it. Interest rates are too high. Demand is too low. You got to lay some people off. There's too many workers. And this is what happens when you raise interest rates. It takes time. We're seeing it with Amazon. We're seeing it with Meta. And we're going to see it a lot more in 2023. Guys, 2023 is going to be a very painful year. And you need to prepare. You need to get your hands on some gold, some silver, some commodities, crypto, anything that will a safe haven from this horrible currency. You know, during most recessions, people say go into cash. I disagree. Just because we're at 7.7% CPI, and the Fed is already near the point where they need to pivot, or else the entire world economy is going to go bust. So they're obviously going to choose to pivot. Inflation is going to go out of control. Banks are going to get bailed out. You're going to be paying like $10 for an apple. Guys, get ready. You know how it is. This is Charts and News, December 7th, 2022. We'll see you guys next time. Stay blessed, stay hungry, and trade equities. Peace.